First, I want to bring in Scott Bauer, the CEO of Prosper Trading Academy. Scott's joining us here to take a look at the numbers. Scott, we look at these numbers, and I guess amidst some of the ups and downs that we've seen as far as economic conditions, reopenings in terms of economies, I mean, you can expect to see a little bit of a roller coaster ride here, and it looks like, well, when you compare the ADP miss yesterday, the Challenger job cut report today, and the weekly number here today, you can see again, we're maybe in for a little bit of a wild ride.
Yeah, and I think, your discussion with Stephanie, she really hit the nail on the head, is that the focus is going to be on tomorrow's number because, she had mentioned that regardless of this number today, better, worse, unless it was a complete blowout number one way or the other, probably would not affect the market overall. And I'm looking up here right now, and the market really hasn't changed too much. This is an encouraging number, no doubt about it. It is an encouraging number, but coming off the heels of that big ADP miss that we saw and ahead of tomorrow's number, it doesn't make this irrelevant, but it puts it in the back seat because all eyes are going to be on tomorrow's August number.
Scott, I imagine you're dialed in on the 4-week moving average as well, kind of tying into the bigger picture non-farm payrolls number. I mean, ultimately to see that below 1,991,000, that's a good number also.
It's a really good number. It's a psychological number, but it's a really good number. It's almost like one of those benchmarks that people are going to look at and say, okay, now we're really moving in the right direction. Ben, I didn't notice, did they mention anything about continuing claims yet or anything, or just the new jobless claims here? I didn't see that number, and maybe that'll, we'll have to wait for that till tomorrow. But yeah, under 1 million, what kind of world are we living in? But that's a good thing that it's under 1 million.
Yeah, continuing claims coming in, here it is, 13.254. That fell from, prior and last month, or last week. Scott, let's talk a little bit about, there was also unit labor costs that we had, which came in at 9%. Non-farm productivity came in at 10.1%. So the unit labor costs are actually a little bit below the 12% they were looking for and below last month, but the non-farm productivity was up. There's a lot of focus on inflation right now, but I'm watching treasuries, I'm watching the dollar, and we don't really see much in terms of fear there. A lot of talk, but not a lot really developing here in terms of coming to fruition.
No, rates hanging, I'm looking up here, rates hanging pretty steady. The dollar, did sell off a little bit initially, but not much of a reaction. And, it'll be interesting to see what some of the commodities in the metal space does, gold and silver, because those have been trading almost lockstep with the dollar. So we'll see if the dollar does wind up reacting to this, what happens in that space.
Yeah, I've been keeping an eye on gold. For the most part, it's been kind of holding in a range. It looks like around $1,875 up into that $2,000 level recently, holding below $2,000. The dollar definitely a factor, though. And Scott, let's just talk a little bit about the dollar. This trade, a lot of shorts, and, it's been overcrowded. But we were talking earlier in the show about how it's really coming from some of the strength we've seen in the other currencies, the euro currency up through the 120 level, and New Zealand dollar. We talked about the Canadian dollar also exhibiting some strength there. I mean, oftentimes we talk about kind of these being the tail that wags the dog, and it does appear as if we're seeing that play out here a little bit right now.
It does, and I think what you're seeing with some of those currencies, especially when I look to the New Zealand and the Aussie dollar and Far East there, is that those economies are actually starting to pick up a little bit, and maybe they're starting to get ahead of the U.S. economy a little bit, and that's why we're seeing a bump up there and some dollar weakness. But you're right, it is a crowded trade. Once we broke those lows in the dollar that we saw back from March, that's where we really started to see some shorts pile on.
Yeah, we've got the Australian dollar here. That's been on the move. You can see up to and through that 7,400 level into multi-week highs. I mentioned the New Zealand dollar. We've been seeing some strength in the Canadian dollar. Here's the Swiss franc and, also the British pound, not so much in terms of the Mexican peso. We're looking at Canada's going to get some jobs numbers here coming out here. And, Scott, with the focal point not only on the jobs report tomorrow, I guess one thing that I'm a little bit concerned about, and I asked Stephanie about this, and I was sort of wondering is, we've managed to shrug off some of the disappointing numbers. If that starts to change, if the focus starts to become a little more on some of the concerns and not so much on the optimism, I mean, that would be a major shift in terms of trend, in terms of what we've been seeing. And ultimately, I think that we'd probably be able to see that coming, or at the very least, be able to sense it once it's here. But do you agree that that's really what we need to be concerned about at this point, aside from weakening economic data, just sort of this sentiment shift to where investors are unwilling to shrug off some of the disappointments, I guess, and the focal points become that, then we could start to see the market or it could weigh on the market, to say the least.
And I think some of that's already started to happen, Ben, and that's why you're seeing the VIX so elevated right now.
Right.
And with the market rallying and the VIX rallying, 15, 18% over the last 4 or 5 trading days or so, I think you're starting to see that. I think you're really starting to see investors, that know that the market is a leader of the economy, right? It's a leading indicator of the economy.
Yeah.
But if we start to see some of that negativity, some of those negative reports coming out, like you said, we could see an investor sentiment shift on the dime. And to me, that's what people are preparing for right now. And that's why VIX is getting bid up. That's why protection is getting bid up right now as the market keeps on rallying.
Yeah, there's also a lot headed our way. It's not just the jobs report. We've got some central bank activity in the coming weeks. And let's talk a little bit about the Beige Book and what you're looking for from the Fed right now. It does seem like, they've made it pretty clear in terms of where they stand on rates, longer, lower, for a period of time, especially with their willingness now to let inflation run a little bit hot. Any surprises from the Red Book and expectations in terms of as we get ahead of some of the central bank activity to come?
Not really at all. I mean, they have, rubber stamped their policy right now, and that's not going to change in the near future at all. But some numbers that came out yesterday that to me were maybe a little bit cautionary were those manufacturing numbers. Mm-hmm. And you had mentioned Beige Book. Manufacturing numbers were better. They continue to uptick, which is good. They're still lower than where they were 2 years ago. But the key when you really dive into those numbers they're not hiring people back. And, we're seeing good jobs numbers this morning, but as these manufacturing numbers have continued to uptick, they're just not hiring people back. That to me is a little bit of a concern.
Scott, appreciate you joining us here to help us take a look at this number. Great breakdown and a little bit of discussion in terms of market reaction too, which for the most part has been fairly muted. It just kind of points to, I think, investors waiting for tomorrow's report, as you mentioned at the top of the show or discussion here. Scott, really appreciate you joining us here. Trader Scott Bauer is the CEO of Prosper Trading Academy. And Scott, we look forward to seeing you back here in the near future.